Hey everybody, this is Max Farrell. This is DexTrader.com. Dex indicators, all of it. Today we're going to learn just a little bit about some flag and pennant processes. Okay. Now, the idea of flag and pennant goes back pretty long, about the process of a move happening and some pullback on that first pullback. So with a strong move and some pullback, having that process happen, let me show you what that looks like. I'm here on a naked chart, Euro USD, and we have a couple of examples that I'll show you. And again, this is not rehearsed, so I'm just going to scan back and look at a few deals and see if I can find some. Okay, here's one right here, and this is a big one, right? So you get a massive move, pushes up, that first little pullback, okay, that first little pullback, and we get our first flag, right? So massive move, big flagpole. Let me draw that straighter. Okay, back up, consolidation, and boom. And what happened, okay, is that once we pierce that first little, in fact, it's even tighter than that. Up, one right there, and one right there. Okay. So this is a flag, and we pierced it right here. Now, how far do we usually go? Well, most say that it should run the same length as the flagpole, but let's just be real. I just want to go from whatever's from here to here, right? I set my stop loss right here. I set my take profit, the same amount of pips from here or to wherever the market is currently to what this is, right? This is usually an R1 to 1 on R1 to 2 risk to reward process, right? So I don't want to get too greedy, because I don't want the market to move against me and stop me out anywhere, or if I try to get too greedy, what have you, right? You could start following up or trailing your stop or doing whatever, okay? So that's one, and that was a pretty simple one. Now, in define these, okay, what depicts a flag to a pennant is that a pennant is going to look as a nice little run and has an open process, right? See, like this one right here went down like that, and we have a little bit of another move for the the higher highs or higher lows, and the lower highs. So a little bit of forced consolidation down in this little area right like that, right? So mostly, I don't even know if I have one on this screen. Let's see, this one right here, like that, and like that. So we sort of have a little bit of a different pattern here. When it gets this consolidated, you just don't bother with it, right? But flag, this is the pennant, and this is the flag. Usually, because it would look something like that, right? It'd be open-ended, and this would be the immersion. If you were waiting here on this time, your time period might change a little bit, right? Now, it's left to so much interpretation that you could sit and spot flag and pennants everywhere, right? You could start looking down here like this and say, okay, well, see, this is an upside down flag, right? But the point is that there's a bull flag, okay? And there's several different versions. The first version, simple, is a bull flag or bull pennant like this, right? Continuation. You also can have a bull pennant reversal, which means that it consolidates down in and then pops down, right? And this would be a bull reversal, okay? Because it was a bull and then went to a bear reversal, right? It's the same thing on a flag. If the flag was in a bull state and it pierced the top, this would be called a continuation. If it pierced the bottom, it would be called a reversal, right? So either way, you can spot the change on that first little process, that first little pullback, because you're looking for the big move and the first real pullback, not like something like this, because you only had one, but you got 1, 2, 3, 4. You got a handful of them, right? And so what you're waiting for is that first it comes back, you're looking for that consolidation, right? And then immersion. Once that happens, there's even another little pullback right here, and then it really tells you, hey, look, this is where we're going. Okay? Now, you could use a lot of different tools to try to figure all this out. You draw lines all over your charts and all that kind of stuff. But we have something over at Dex Indicators, that's pretty handy as well, right? And we call that the Flag and Pennant indicator. And I got it set up on this chart right now. And look at this. There's that, it calls it as a flag, right? Here's that setup that I was showing you before with that huge run. So it's calling it as a flag. So even though my interpretation was this, it showed it here. But you can kind of see the system set it up as well. And that wasn't rehearsed. I really just went right over to that. It's pretty cool, right? Here's another one right afterwards. Okay. Now, on this one right here, we got faked out a little bit, right? We got faked out a little bit. Now, if we would have went with our ratio that we go from here to here, this is our stop loss. We can take our stop loss down to here, wherever the market is. We got right there. What is that? That's 13 pips. Remember, we don't got to get a lot. 13 pips now from the time of getting into the market is right there. Boom, we got our money. Right? The same thing is here, that if we got into this trade, 13 pips, we just won, and our stop loss is right there. How much of a loss is that? If we got in right there, we're about 13 pips. So we kind of broke even in 2 trades. But we easily start to get into money trade, pierces out right there, definitely money trade. So we're winning pretty consistently, right? If you only stay with one type of bout, did we really get broken out there? No, we wouldn't have gotten stopped out there. So this would have been still an active trade. You know, after a certain period of time, you have to ask yourself, how many pips is enough? You know, that's 20 pip run, right? This system is so easy to use. Here, I'll just flip over to another pair, an asset. This one is this is from something else. And again, 16 pips. This would have been probably not taken, and we would have probably missed out on about 15 pip loss there. But this one was definitely a winner. Boom. What would we done on that one? That would have been a 10 pips, so we would have 10. There's another win. There's another winner. Well, this one we would have canceled it out because we really wouldn't have violated. We wouldn't have immersed past it, and another flag would have showed up. And same thing here. Probably wouldn't have got into this because it was so far out. You got to get immersion pretty fast outside that bar. So 1 or 2 bars past the end. If you're not, you know, and I wouldn't set. You want to close. You want a pair to close over that line, right? Not just push it, because these are stop hunters, right? You want to look for those pairs that go to close above that line. So it's a manual system that you want to look. Like something like this, you want to make sure you could have got into here, you know, you would have drawn back just a little bit, but you want it to be, hey, it went through the line, right? All right. So this is basically one of those systems that's pretty strong if you can stand the stomach of following it, right? Because it takes time. You got to be patient. You're not going to win every single trade. Like you have immersion, right? Set the stop loss up here. Boom, it gets hit, it gets taken out. How many pips are you out? You're about 17 pips out. Okay? But again, your interpretation is important. Okay? Because at the timing, how these things kind of flag out. Look, we're probably going to set up into this because we got another low bar. So you start tracking it. You start asking yourself, all right, this is, once you start to spot it, right? Once you start to spot that process, because now you're starting to pull in, you know, where's this channel going to be at? And it'll set up, you'll see, it'll set up in its little process. But a flag and pennant system is only as good as the money management and the account management, the buy-in, the risk to reward management, all those little managed things that you have to do. A flag and pennant system is only as good as the user's going to let it be. If you're going to take risk, you're going to get into a trade something like this, right? You're only looking for about 13, 14 pips right there. 18 pips, right? Where would you have gotten in 18 pips right there? You would have made your money. If you would have held on to it and not gotten out, if you put your take profit all the way, down to here when you first got in, hopefully you're going to score $1 billion on it, right? You would have got stopped out with this crazy bar. Easy. That's incredible. That's probably news or something happening there. Yeah, that's definitely news. But these things tell you what it needs to get. Now, some people say take the profit at the where it started at, right? And you could have done that, but you really wouldn't have made much because the first bar to close over, right? Because if you went with the rule, first bar to close over is right there, right? So this is probably not a trade. If you're trying to get in within 2 bars, this one would have been the second bar, right? So you probably wouldn't have gotten into that one. And again, you have to look at the market. Flag and pennants are good. They're gonna win you 75 to 80% of the time. And if you got a good R to R value, you're gonna do well. But you got to be patient. You got to have follow through. Okay, so that's important. All right. Well, I just wanted to give you a little quick update. If you want to go over and check out the indicator, if you want that indicator, if not, at least you know some ways to be able to look at the process. Right? And that hopefully it helped you out. I'm Max Farrell. This is DexTrader.com, and I hope this finds you well. You guys have a great day, and as always, trade well.